Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is US CPI Live. Today, we're going to break down the latest inflation numbers from the U.S. government, the first such data sets that we've had since the big government shutdown. It's going to be exciting. We're looking for inflation numbers. Remember, CPI is all about inflation. We're going to go through what it is. We're going to give you some key levels to look at and also some trade ideas potentially that we can execute. The big story already today is another move higher in WTI crude oil. I'm watching that like a hawk. That's my specialty. And then gold, we've got a trade idea for gold that, it isn't too far off. We're going to really look at that key level, break it down, and then we're going to shift gears and go on over to the 9 EMA with RSI confirmation, and we're going to do a little bit of high-impact scalping. So if you don't know what any of that means, don't worry about it. You're in the right place. We're going to go ahead and spell it out for you. If you have any questions at all, be sure to ask. We have a lot of people on the streams right now, though, so if I don't get to your question, you got to come on back next week and go ahead and ask me again. But we've had a good week of trading, really some long live streams. I mean, the live streams have been running like an hour. Today, we're not going to be doing that. We're going to be getting in and out. We've got some key data. We've got a lot to go over, so we're going to go ahead and get to it. I want to welcome everybody out in YouTube land. It's good to see the big turnout. Yes, sir. Good to see you. Fala, always a pleasure, guys. Bobby Bob. Good to see you, Bobby Bob. Let me see. Game. Have a delay? I don't think so. I think we're rocking and rolling, ready to go. Hello, Nicholas. Hello from France. Hello from Dillon, Montana. I'm out here in the western Montana up on the High Line, so it's a lot of fun. Delay on the chart. No, my charts are going to be live. We're going to be good. Tina, good to see you. Tina, welcome. Let's see. No donation Friday. I don't know, Bobby. I think today we're going to be trading and we're going hard. Ahmed, good to see you, Ahmed. Welcome. Lewis, always a pleasure, guys. Steve Francis over in the How to Trade Trading Room. Always a pleasure, Steve. Wow, some news from the U.S. Yeah, we haven't got any. We haven't got any in a long time. Lita, good to see you, Lita. All right, guys, let's jump right into it. Remember, if you want to trade any of these ideas or break down the markets and analysis on your own terms, go ahead on over to Switch Markets. Lots of bonuses. We're going to be coming out with a ton of content on that Switch Markets YouTube channel, so just stay tuned. But that right there, bonuses, zero commission accounts, tight spreads, whatever you want. Just go ahead and head on over to Switch and check it out if you're interested in going live. Okay, let's hit the ground running here. Huge metal sell-off highlight Tuesday session. This is a trade idea that we've had on the board for quite a while. Let's get right on out to the gold market. I know most of you are gold traders. And right there, what do you have? You have gold on a weekly time frame. This was a real beautiful hit right at 4,000. We had some traders, some astute traders in the How to Trade community that were sort of pointing out that 4,000 level, that 4,005 level going long, and it turned out to be an absolutely fantastic trade if you could get filled. Life got really crazy down here right around 4,000. A lot of bidders stepped in to defend this uptrend. Right here, we are sitting with our trade idea somewhere down around 39.71. I think we're buying 77s, about $100, $90 down the queue. Normally $90 in gold, I would say we don't have a chance of getting filled. We have a chance that when this number drops, I mean, I'm not going to try to build it up too much. This is the first government data that we've had since the U.S. government shut down. I don't know what's going to happen. I can tell you this. We're going to be ready. So I'm fascinated by that level right there. We also had another trade idea. Now, sometimes when you have one of these items that's huge out of the United States, it's going to shake up markets around the world. It really will. But sometimes you want to get away from something that's denominated in U.S. dollars and trade something a little bit different. That's where the Aussie Kiwi comes in. This was a trade idea that we put out the other day. We're looking to buy a little bit of a support zone here in the Aussie Kiwi, and I'm watching it very, very close. You can see right here on the weekly time frame, we've got another pullback potentially in view, 112.52. I think we're looking at 57s possibly as being the ticket, and we're about 50, 60 pips off of that. Really love this, though. We've got the 9 EMA on our 920. If you're not familiar with that strategy, come on into our live streams. I'll be sure to hook you up we'll give you the intel on that. But the 920 right there, you've got a 9 EMA, a weekly 9 coming right up on that 38%. 112.52. We're watching that closely. That 112.50 area, that could be very, very good for the Aussie Kiwi. Now, as far as the big story of the day, like I said, I'm an oil specialist. That's what I do. I will be the first one up in the front of the room saying I did not see this move coming, and the reason why is it is news driven. Brand new sanctions out of the United States on Russia. The two big oil companies there that I forget which ones they are, but the two big oil companies that are doing all of the exporting to China, to India, those guys got sanctioned huge. Personal sanctions by the U.S. government. You don't ever want that. You don't want the U.S. government looking you up by name and coming after you. That's exactly what happened. Sent crude oil to the moon. So all of a sudden, China and India, they have to go and be looking for different suppliers of that crude oil to support the massive economies. We had a big gap up. I mean, it's not a gap, but it's a big move up. This week, we're up about, 8.5%. In the middle of the fall, that's unbelievable. But right here, we really scoped out that level very well. We pointed this one out on live stream yesterday. 62.44 to the top side, 62%. Also a 13-week EMA right there at 65.96. I mean, that's good living. That's pretty good scalping right up there. I think we may have picked the top of this crude oil market. You say, Shane, do you want to be long or short crude? I want to be short. Right now, I want to be short. We will see exactly how that pans out. And then here's our strategies. We're going to be looking at the 9 EMA on very short time frames here for the Euro USD. And then we're also going to start off with NQ NASDAQ futures. And I'll explain that when the time comes. We've got 5 minutes until our number drops. Let's go ahead and have a look at exactly what CPI is and what exactly we can do with it. Now, week 43, it's been all about this number. The rest of the week been very quiet except for those sanctions. Seems like every week with the Trump administration, something big happens. How does CPI impact the Forex? A low CPI is going to be bearish for the U.S. dollar. A high CPI is going to be bullish. Why? It's all about interest rates. It's all about monetary policy. When inflation's big, what does a Fed do? What do central bankers do? They raise interest rates. They reduce the money supply to control pricing stability. All right? That's good for the U.S. dollar. It means the dollar goes up. Things like risk assets, crypto, they go down a little bit. Commodities typically go down a little bit. When it's low, when CPI is weak, and it shows that there isn't much inflation, what do we have? Well, I mean, you got a bearish USD. What does that mean? Risk assets up means crypto up, means metals up. Why? Because the United States is going to be looking to cut. The central bankers are going to be looking to cut. The Fed's going to be looking to cut rates. And that is the cycle that we're in right now. So definitely be aware of that. Here's sort of our projections. The biggest thing I want to take away from all of this jazz, and we'll look at it when the numbers come out here in about 4 minutes, but the biggest thing I want to look at here is core CPI. Now, core is going to be important today, more important than usual. The reason why is because the gas prices have come down a little bit. Energy prices have come down a little bit from the summer. That's going to sort of skew your CPI numbers into being a little bit less than maybe what they really are. We're going to be looking at core today. Remember, core measures the change in price of goods and services, excluding food and energy. That's what you need to know. A lot of focus on core today. When you read the headlines later on this afternoon, core is what they're going to cite. If core comes in hot, we're in big trouble here, and I think it's going to be an interesting figure. And you can see right here, here's our trajectory over the last 10 years with our CPI figures. And we'll talk about this a little bit later, but this is right here, just explosive inflation since COVID, and this is what you're looking at with the raw data over the last year. It's just a hell of a trajectory. You're going up and away, and you better figure out a way to put the rabbit back in the hat, or else we're going to be buying $10 or $15 loaves of bread here, and we're getting there soon. I think they're already 4 or 5, depends what kind of bread you buy. And then remember, later on the U.S. session, there's some S&P PMIs out. Don't put too much weight on these. Just remember, they drop right after the open. So be ready for some volatility about 15 minutes after the open. And then also new home sales is supposed to hit the wires as well. Big time number, that's for sure. But the big story here, CPI, we're watching this closely. We're going to wait exactly when this thing drops in about 3 minutes. If you guys have the number, shout it out, write it in the live chat because you'll have it before me. U.S. government shutdown is the big story again today. We roll on to the 23rd day. There's a lot going on with that too that we may cover towards the end of the session. Right now, it's all about those EBT and food assistance programs going offline November 1st. We believe that's going to bring enough pressure to get this thing done next week. I expect a deal announced anytime in the next several days. So be ready here. This could definitely bump the markets higher as well. Okay, we got a little bit of time here before the number drops, about 2 minutes. Good. I'm way behind on the live chat, guys. Good to see everybody. Let me see. Phil, good morning from Ohio. Good to see you, Phil. Welcome. Kuna, hello from India. Good to see you, Kuna. Welcome. Hello from Nigeria, Jackson. Always welcome. We love it. We have a global community here. Dylan from South Africa, right on. Ian from Kenya, right on. Beast wants to buy or sell. I don't know yet. But we're going to know very soon, about 2 minutes, about a minute and a half. We're getting ready to go. What is the impact on silver and the COMEX, Kuna? What's going to happen here with silver? And we will pull a silver chart, I promise you. The silver market is absolutely fascinating right now. We're in a pullback mode. Remember, if CPI comes in hot, you're going to see gold and silver take pressure to the downside. If CPI comes in relaxed, you're going to see those markets move higher with the prevailing trend. That's how it'll work. Let me see Human. Hello from Iran. Good to see you, Human. Welcome. Let me see Aku. Hello from Indonesia. Right on. Indonesia in the house. Let me see Innocent. South Africa here. Good to see you guys. Jalen, buy. I don't know what you want to buy. I'm not buying anything just yet. I'm waiting. Jury's out. You can all start to use the sell limit. It's going to go down for gold. Really? Game likes this thing to the downside. Well, we got about 50 seconds here before we get there. Hoping for 3% or lower. Dobran, it's not a bad call. Let's see, Nicholas, 3%. Fingers crossed. Good morning from Houston, Emmanuel. Good to sell you. Good to see you. Emmanuel sells Houston. Are you a real estate agent, Emmanuel? Good morning from Houston. All right. Good to see. So there's a few Americans in the house. That's nice. Let me see MLE. Good afternoon. Good morning from Vietnam, Gwen. All right. Prediction. I think it's going to come in hot. I think we're going to see a big CPI figure right here. Okay, here we go. 10.98. 7.6. Let's get right out to price action here with our Euro USD. Let me see. Hello from Japan. Good to see you. Hello from Japan. I'm buying gold. Wow, a lot of. Here we go. Do I trade myself? Absolutely. Okay, there's the move right there. So that is an incredibly dovish move. Apparently, out of the Euro USD, we got the big move to the top side. So what that's going to sort of set us up for now with this 9 EMA is going to be a potential sell, but we've got to wait for a few criteria to be met. So let's let the dust settle. What exactly was the number? Does anybody have the number? Let me see. Ifty, good to see Ifty. Ali, what do you think about numbers? I think that they're confusing. Pakistan in the house, right on. Good to see. All right. So you got a big move to the top side right here. You've got 1650. Apparently that's what we're printing here in the Euro US dollar. Absolutely huge move. Let's go ahead and just go with this chart without any levels. Let's go back over to our gold chart. Gold's starting to bounce. I mean, that's about an $18 bounce since the number came out. Does anybody have it? I'm looking. Let's go to the Euro. 3%. Okay, 3%. Let's see right here. Latest numbers. 0.4. They're still not updating their website. Unbelievable. All right, here we go. CPI for all items rises 0.3% in September. Gasoline up. In September, the consumer price index for consumers rose 0.3, seasonally adjusted, and rose 3% over the last 12 months, not seasonally. The index for all items, less food and energy, increased 0.2% and is up 3% over the year. So right there, how about our Kiwi trade? Okay, our Kiwi trade didn't do anything. How about U.S. oil? U.S. oil sort of in a bit of a, I won't say flummoxed, but it's definitely sluggish. Okay, Euro USD, what do we have here? Okay, if we're looking to scalp this thing now, 9 EMA. We've got a 9 EMA on our charts. We've got the relative strength index to the downside. That's our confirming tool. As soon as we're up over 70 in the RSI, we're going to look to sell the market. In order for us to sell, and this is very important, we've got to get a bar closed beneath the 9 EMA. Then we send them short and we don't worry about much else. That's amazing. CPI for all items rises 0.3% in September. Let's go ahead and get over here, and then we'll get back to the trading. We have a minute before this stuff sets up. All right, here's the CPI. The consumer price index for all urban consumers increased 0.3% on a seasonally adjusted basis in September after rising from 0.4% in August. So it's down just a little bit. US BLS reported today. Over the last 12 months, all items index increased 3% before seasonal adjustment. Note that the CPI data collection was completed before the lapse in appropriations. Very, very important, guys. This is what we're going to look at with our next NFP number. The numbers were already done. They're already done. And these people are sitting on these numbers. Right there, note that the September CPI data collection was completed before the lapse in appropriations. That means this thing was done. It's been sitting on the shelf for how long? NFP's the same way. Be very careful today. Everybody knew this number. And I mean by everybody, not us, retail traders, but the folks that are in the know, the government people, the institutions. They all knew. There's no way they didn't. So let's get right back out to price action. This Euro USD is starting to set up beautifully. Let's get on over to this NASDAQ. Okay, what do we have on the NASDAQ here? Crazy candle. All right, sort of a dovish print. So all suggests a dovish print. That's fascinating. Does that mean that the markets are going to go up into perpetuity today? Meaning, are they all going to trend higher today? I don't believe that for a minute. Those numbers have been baked into the cake for a long time. I'm not buying them at all. Let me see. Core came in. Year over year, core Steve Francis came in 3%. Do you want monthly or yearly? If you have monthly, that would be great too. Let's see. All right, well, it's 0.2% right there. 0.2% in September after rising 0.3% in each of the preceding months. Indexes that increased over the month include shelter, airline fares, recreation, household furnishings, and operations. Shelter, housing, house prices, rents. Absolutely ridiculous in the United States right now. A lot of folks are moving out because of that. But in any case, we're looking at the NASDAQ futures right here. We've got a pretty good opportunity here probably to place a 9 EMA trade in the coming minutes. I want to look around, though, a little bit. Euro USD, this is sort of exactly what we're looking for, a little bit of compression. We're deep into overbought territory. I want to sell this thing. We just have to get a close beneath the 9 EMA. Let's do something different here. Let's look for an active trade. Let's go Great Britain Pound USD. One last thing I probably didn't mention. I'm looking at this on the 1 minute time frame. We can go smaller if you'd like. I want to stay on the 1 minute time frame because right now I feel like we have a pretty good range to work with. Great Britain Pound USD is almost the same looking chart as the Euro USD. Let's go ahead and look at the dollar yen. Dollar yen's going to be, the backwards, pretty much the inverse of this. Same basic thing. We're deep into oversold territory, so we're looking to buy up above that 9 EMA. If I had any of these that I would like to trade right now, which would it be? I would rather trade the dollar yen to the top side. That's what I would rather do right now. Now, the numbers suggest you're going to get a dovish US dollar. Okay, what does that mean? It means that the inflation maybe came down a little bit, maybe more than expected. All right, if that's the case, then you're probably looking at those rate cuts that we have green lit for the end of the year being all systems go. So right here, I understand that we're going to be playing against the technicals are setting us up to play against the fundamentals, but I don't necessarily mind it because I don't believe that number is going to have the impact that everybody thinks that it will today. Those numbers were completed before the government shut down. They've been sitting on them for like a month. Are you kidding me? I don't believe that for a minute. I think that everybody knows the numbers except us. I wish I knew them, guys. I would tell you ahead of time. I really would. I don't like secrets like that. PPI week, CPI week, bloody 77 CPI. CPI is the name of the game right now. Let me see. GC Mike, 200 pips. In 11 seconds. Wow, can't beat that. GC Mike, I bought gold. You're a rich man, Mike. You're a rich man, GC. Can I have a loan? Unbelievable. Good number. Good number. Yeah, I mean, that's a very good number, Juan. Absolutely right. As far as what we're looking to do is just be patient here. We're going to have to move along to something else, though, because I can see this is going to take us a little bit to get these set up. Let's go over to our Aussie. I want to go ahead and throw that silver chart up. We got a question about silver. For me, silver is very simple. It's very simple right now. We've got our 920 up there. Just don't worry about those moving averages. Those show you that we're in a really steep trend. Great trajectory. Amazing sell-off this week. Is this the end of the silver bull rush or not? Not a chance. We're going higher. So 50, remember, key levels. We had a key level seminar the other day. A lot of you joined it. I want to thank you for being there. 50 is the big round number that we need to be aware of. That's probably going to attract some attention moving forward. Right there, spike low to a spike high. And there's your Fibonacci retracement. 38% was a very beautiful thing. I'm looking at 47.80 to the downside as being potential support here. If you break through this level, you're going to go a lot lower. You're going to go a lot lower. Now, 62%, 43.66. I mean, I put it out on X the other day that 45 might be the buy of the year. It might be the trade of the year. If we get that, we should consider ourselves fortunate. I want to be long silver, but I want to wait a little bit. If you're a trader, if you're a day trader, an active trader, you probably are looking at 47.80-ish, 47.80, 150, baby, to potentially make a scalp today. Let's take this right down to a 5-minute chart and see where we're at with our levels. You can see if you're trading the 920, you have a sort of a buy right there, which was a great trade. It was before the news came out. I'm watching this level down here today is being significant downside support. So if you're trading silver, the silver USD, if you're trading maybe spot silver on a number of different vendors, or if you're trading a silver CFD or silver futures, that 38% on the weekly, that's the one I would be looking at, 47.80-ish, pretty darn good buy down there. Definitely. The DE30, Ahmed, yeah, I can take a look at that in a second. DE30. The DAXy, I'm not a big fan of the DAX. I don't really trade it. 5 minute 920 has you on a buy there. Let's go ahead and check our one minute charts. Okay, now we're getting into range right here. I like what's happening. I really like what's happening here in this dollar yen. We're going to have a chance potentially to trade it. So essentially what's setting up on our short term right now, what's setting up is you're being in a position potentially to buy the dollar, and I'm probably sure that the Great Britain pound, the Euro USD are just like it, just flipped. You're looking to buy the dollar potentially, and then you're looking maybe to sell those equities indices. So when we get going here on this is going to be interesting. We're going to have a couple of positions, it looks like. We want to be looking to sell. We're going to sell market. We're going to send 4 short right here. We're not going to do the take profits and the stop losses. We're just going to go ahead and sell this thing. All right, we're going to get back to the DE30 here in just a second. But if you do take a look at what's developing on our 9 EMA, we're getting ready to pull the trigger on a short here on this NASDAQ, E-mini NASDAQ futures. Now, what you have here is you have a severely in overbought territory. That was on the news. RSI, Relative Strength Index, that's our confirmation device. We're above 70. That means we're looking for a sell signal. Now, in our 9 EMA is what I call the trigger. All right, that's what we're looking for to get us into the market. What we have to have right here, we have to have a close. We have to have a bar close beneath the 9 EMA. As soon as we get that, we're going to sell the market, and I'm going to show you where to put the stop losses and the profit targets. This right here could be a very beautiful trade. Like I said, I'm not really believing that we're going to get full-blown trend days here. I'm not seeing that. I think that number's been around a lot. I think a lot of people have been talking about CPI a lot for much longer than we think. This is potentially a trade for us. We've just got to get that bar closed beneath the 9, and right now we're looking at it very closely. I don't know that we're going to get it on this price bar. We've got about 15 seconds. Let's just let this thing roll and see if we, in fact, get a shot at it. I would like a shot right now. Okay, remember, the one rule I have about this is it needs to be obvious. If we close right on the 9 EMA, I'm not taking the trade. We've got to get a break. We've got to get a break and a close somewhere down in here. That'll signal us that the market has sort of changed direction. Now, right here, that 9 EMA is setting up as support. That's fantastic. That keeps us out of the trade. I have no problem with that. I would love to see that selling pressure come in, though, because I think it's there for us. Dollar yen, okay, dollar yen right there. There's our trade. We're above it. We're pulling the trigger right now. I want to go long. Buy, market, boom, send them. Okay, we're long right here. Now, the market's going against us a bit. That's fine. These are 1 minute charts. It's not going to cost us a fortune. This right here was our bullish close right above our 9 EMA. With my stop loss, where do I want to put it? I want to put it right beneath this swing low. So my stop out point is going to be right down here. Swing low right there. My profit target is going to be right up in here. At least a 1-to-1. I have no problem with that. That's what I'm looking for here. At least a 1-to-1. Now, if you want to go 1-to-2, 1-to-3, feel free to do that. But on this type of a strategy, I'm looking for a 1-to-1. I want a high success rate. I want to win as many of these as I possibly can. Right here, we're in a little bit of trouble, but we'll go ahead and wait. I mean, that's what these are for. We're risking about 19 pips, something like that, about 19 ticks. And we've got a chance potentially to maybe make a little bit to the top side as well. Interesting type of a trade. We're watching that closely. All right, here's our NASDAQ. Our sell is now in play. So where's your sell? Your sell's right there beneath the market. Okay, right there. Boom. Bar closed beneath the 9 EMA, and now we're coming off a bit. Now, how do we want to design this trade? My stop loss, I'm going to put right up above that swing high. It's going to be right up in there. So somewhere right up in here is going to be our stop. Right there. Profit target is going to be down in here. I want at least a 1-to-1. Now the NASDAQ, it looks like this is starting to develop and go our way. The biggest thing we have to do, if you're going to be a successful trader with these types of cross trades, these 9 EMA trades or a crossover EMA strategy, you've got to be able to stay in there and hold your water. Now, with your stop losses on these strategies, there's a lot of different options. I gave you the most basic. A lot of folks would say just go above market structure, take the short, and play this thing down here. I don't have a problem with that. I really don't. It's just all about your risk. Personally, I would be probably a little bit tighter. You could even go really tight right above your entry bar there. You could do that. I want to give this thing a little bit of time to work. So we're going to just go ahead and sit right there and see if we can get a little bit of downward trajectory. Markets are choppy right now. We're not getting much follow through. Let's go back to our dollar yen trade. Dollar yen trade sort of back to break even, sort of milling around, but I don't mind the market structure at all here. We've got a chance in both of these trades to make a little bit of money. So watching this closely, is this high risk trading? 1,000%. This is 1 minute charts after a key news event. This is when you would look to do this type of trading because there's a lot of action in the market. Now, once the market starts to dry up, then you run into big trouble. So right now we're sort of picking that the U.S. dollar, maybe it's ready to come back a little bit against the fundamentals. So I'm interested to see exactly what develops with these trades. Am I optimistic? Yeah, I'm optimistic every time I take a trade. But here's the thing: when you get into the market, risk management is everything. Now, I showed you probably where to put your stops and your profit targets, but what you have to do is allocate risk. 1 to 3% of your trading account on any one trade. If we lose this trade, we come right back and we're ready to go again. That's the way that scalping on 1 minute charts works. That's the way trading on short time frames works. So remember, risk management is everything. It is everything. Be sure 1 to 3%. On a 1 minute chart or anything really small, I would not go to a 5 or 7 or a 9% risk. Not a chance. Let's go ahead and go up here to the NASDAQ, see how this trade's doing. Same basic formation. Here's the big move up. The question now for us as traders, do we fill in this CPI bar or don't we? I have a pretty good feeling that, yes, we're going to fill this in at some point. Does our system right here, does our strategy help us do that? Right here for the NASDAQ, it looks like this market is getting ready to fall away. It really does. Does it fall away now or does it fall away on the US Open? We don't know. We're just going to have to wait. There's the gap up right there. And when you're trading 1 minute charts, you can definitely get knocked out of the box very quickly because our stop losses are so tight. This is very tight. You would have to dial this in with just great risk. I think our timing's pretty good, but we're just going to wait and see what happens. Market's starting to go against us. I like this dollar yen trade, though. I think we have a pretty good chance there, maybe to get a rally. And like I said, the risk on this dollar yen trade, not very much at all. As far as these trades, though, they are going against us. We'll see what happens. Let me see gold. What about gold? Is gold and silver a buy or a sell? Well, I mean, we're getting killed on those. As far as gold goes, long term, and this is sort of my bread and butter, the Fibonacci's, these types of trades, this type of stuff right here is going to get you into the market long beautifully. Do I want to be long or short right this minute? Well, I mean, if you take this down to, say, a 5 minute chart, let's just go right down to a 5 minute. What does this really tell us? It tells us you want to be long. Spike low right there. Right there's your news bar. Pullback, failure at 50%. Probably going to creep higher. So what I would recommend is probably if you're choosing a way to go on any of these markets, be very careful. Be very careful right now. The CPI number brings a lot of volume volatility in here. If you caught this move here, we had a gentleman in the live chat there that did catch it. That's fantastic. But right now we're just sort of flattening out. If you want to make a decision whether you want to be long or short gold, I'm looking at my dailies. I know exactly what I want to do from down here. I'm buying 4,000s. There's no question about it. And we're probably also buying, your 30, 39, 89, something like that. Those are pretty darn good trades. So I would be looking to bid this market, but I don't really want to bid it from here. This is a daily chart. You can see there's your big move, and now you're flatlining. Very, very difficult to sort of put any sort of flex on that at all. I think you're probably better off just waiting until we get maybe something to open up here. There's your 30-minute chart. You can see it's very challenging because there's your big news candle. We're sort of on a downtrend here over the last, since the London Open. And we came off and then boom. Now you're moving higher. You're in a situation where do we believe that we're going to trend higher today with gold? I don't. I see trouble on the horizon, guys. I see choppy markets. I see a lot of different things happening that aren't necessarily going to give these things a direction. Right now, we're looking sort of our futures. We were up slightly yesterday. I'm thinking, I see reversals across the board. If I was betting right now what's going to happen on the US Open, I would bet reversals against the news. And the reason why is I don't think that news surprised anybody. I really don't. So Kuna, gold and silver, a buy or a sell. My bias is to the top side of those markets. I want to buy them, but I won't buy them from here. We've got to wait. Silver, we already sort of covered silver. I want to bid silver, but I want to do it, with a little bit of aptitude. And what I mean is I go to my weeklies. This is a beautiful week. Stopped out a lot of retail longs. It really did. Where do you want to be long from? That's a beautiful thing right there. 38%. That's what you want. As far as what can we get done, I don't know yet. I think we could probably scalp this level for the rest of the day to the top side in silver. But realistically, the bid, the play this year, right down here in the golden zone, between the 50 and 62%, you're going to want to go ahead and take a look at that 13-week EMA, which is at 44.33. I think 45s in silver, those are that's the bid of all bids more than likely. That's the bid of all bids. Let me see. Cest, what time is CPI now? So it just came out. All right, guys, so that's sort of a wrap from here. Let's go ahead and take a look at our trades. Okay, the yen sort of went our way. That's fantastic. As far as the NASDAQ, we're creeping along. I still like us to the downside. I think that if you wanted to give yourself a real chance to win this trade, you probably put your stop up here and wait for that open, hopefully ride out the noise and maybe take a shot at market structure down there. I think that's more of a viable trade. As far as playing it real tight in here, we wanted to get that initial scalp. I still say we get the negative price action. I don't think this trade's dead at all. But remember, moving your stops back is never a good idea unless you're going to expand your profit target as well. This stop loss right here, is that good? But you can see right here why I don't like playing tight on short time frame scalping. We would have got stopped right there, and now the market's starting to truck in our favor. I would just go ahead and put it there and see exactly what happens. As far as our Japanese yen, though, I really like what's happening here. I mean, we're pretty much already paid off at a 1-to-1. You can see that we are starting to fill in. So there's a very good chance that we caught the top of that dollar or the bottom of that dollar, and now we're in position really to make some great positions going into the U.S. Open. Love it. I think that's fantastic. All right, a couple other things that we need to go over here before I sign off. And I want to thank everybody for joining me. I think those trades are pretty good ones with the 9 EMA. If you're interested in any of those strategies, check us out over at How to Trade Calm on YouTube. We've got a bunch of strategies out there. We've got a lot going on. So be sure that you consider thinking of going over there. Maybe the 9 EMA video is one of our biggest ever. Feel free to go check that out. I show you exactly how to trade it. And it looks like we're going to go up and touch our profit target here. And there's nothing wrong with that. Nice 1-to-1 payoff. If you wanted to hold that position, you probably could, especially if you're looking at maybe market structure up here, something like that. I think you could probably hold it and be okay. But this right up in here, we already sort of hit our profit target. Do you take the money or not? We can go ahead and ring the cash register. Boom, we're out. Pretty good trade. Now, as far as what we've got going in the NASDAQ, not so good. It's starting to really creep against us. I still say there's a big sweep coming in and a fill-in, but you got to go ahead and ride that one out, and we'll see exactly what happens. Remember, these are demo dollars. There really is no rhyme or reason to the leverage. I just throw positions down. I think trading 4 contracts on the NASDAQ is possible if you have a prop account or you have a little bit of cash to play with. That's for sure. Absolutely, Connie. You're welcome. All right, guys, remember, head on over to Switch Markets and get in on the action. One of the things that we did launch just recently, and it's behind my picture, but there's a whole bunch of new free tools here. So if you're interested, just go there, click resources, and all of the free trading, view all the trading tools, the free trading tools, all the trading tools. I mean, there's a lot there. There really is a lot there. So you definitely want to head on over, check out our tools, economic calendar, currency strength meter, profit calculator, heat map, pip calculator, cager. It's got everything for you, and it's all absolutely free. So definitely check that out over at Switch if you're interested in trading. But this was the headline data. CPI came out, and it came in a little bit better than expected. The core numbers are interesting. I think that we're in a fascinating situation going into the next Fed meeting. All right, I'm a little bit frustrated with my NASDAQ trade. I thought that sucker was going to tank. I still say it tanks, but it doesn't look, it's just really slow. Volumes have sort of flatlined. You can see the volumes just sort of flatlined down there, and you'll notice that the biggest thing that we're fighting with is just a dead market, a timid market, a tepid market going into the U.S. Open, and I don't blame folks for not wanting to take risk right now. Once that U.S. Open occurs, a lot more volume comes to the market. One last thing to remember, too. As we move forward in this session, 15 minutes after the open, those S&P Global PMI numbers are going to drop. That's going to bring some short-term volatility to the market as well. Also, about 15 minutes after that, you've got not retail sales, but you've got new home sales that are going to drop as well. Those are all key numbers that I don't expect them to do what this did. They'd call this a God candle. I don't expect any God candles. I learned that the other day on the live stream. I'm not expecting any God candles, but what we are expecting potentially is a little bit of wiggle on, say, a 1 minute or a 30-second chart. Be very, very careful. Very, very careful. And one last thing I forgot about the DAX right here, 5 minute, nice 5 minute buy. Let's go to a weekly chart on the DAX, and then I gotta go. We got a lot to cover today. I got a lot to do today. This right here. Nice big bounce off the 9 EMA weekly. If I was watching this, I was trading this German DAX, and I don't typically trade these, but my approach will pretty much trade everything. I would go to my long-term stuff, my long-term levels. Look at all those dojis. Look at all those dojis. What's the big number here? Well, we're right in front of 25,000. That's big. This is definitely a bullish pennant. You'll notice right here, let me get my little crayon out and I'll show you. It's a bullish pennant. This right here, you could say going back to April, sort of a bull run. And since then, we've just gone sideways, but it's still very bullish. It's a bullish flag. That's that uppercase P formation that I always talk about. Something like this, I'll be looking to buy discounts, yearly discounts. I don't think you're going to even come close to getting that level, but I would be very, very cognizant of the $25,000 level here in the DAX. So right there, 25,000. You've got something right up in this zone. That's not exact, but you get, well, let's dial it in while I'm here. Let's do it right. 25,000. That's a pennant. That's compression right in front of a key level. 25,000. As soon as that level gives way, we're not just going what? We're not just going a little higher. We're going a lot higher. Very, very important. All right, guys, I'm going to go ahead and sign off. And, oh, yeah, NASDAQ's coming back our way. Just a little bit of patience because we got the tools and the talent. If you guys are interested in some of these strategies, head over to How to Trade, and we'll get you locked and loaded and ready to roll. I want to say thank you to everybody that showed up. We had a lot of folks watching this one, so that's absolutely fantastic. Any questions at all, come on over to How to Trade. Send me a private message. I'll be sure to get in on it, or be sure to get back to you. Everybody over in the How to Trade community, I know we had a lot watching today too. A lot of familiar faces there. Thank you for helping me out with the CPI number, and also thanks for showing up every day. I'm going to have the new schedule up in the How to Trade trading room for next week. That's going to be up probably a little bit later today. We got a few things to do this morning, some housekeeping. But other than that, we're ready to rock and roll. Moving forward, two things. U.S. government shutdown. That's beginning to become a major market driver. Remember, November 1st here in the United States. If they don't get a deal done next week, those November 1st SNAP programs and EBT programs that give a lot of folks assistance, government assistance, about 42 million Americans, those are going to come off of the board. When those come off of the board, then things really change. I expect a deal to be done next week, so that doesn't happen. So be ready for the U.S. government shutdown to end, I would say, in the next 5 days. Next 5 days. If they don't get it done then we're going to go into some real issues in November. It's going to be a lot of fun to trade, not so much fun if you're impacted by the shutdown. All right, guys, that's a wrap. Tina, have a nice weekend. You too. All right, guys, I'm going to go ahead and sign off. Have a fantastic trading day and weekend, and we'll see you back here Monday. As always, trade the action well, and we'll talk soon. See ya.